John, it's 10 years since 9/11. What have the markets done in that time?
If you're looking at US markets, very little. You have, depending on which index you've looked at, made something of a return. Nothing remotely like the kind of return somebody would have been expecting from equities back then, and you would have been better off in bonds.
Right. Bonds outperformed equities considerably.
Yeah.
So it's been a lost decade for equity investors.
Yes.
I think we can say that fairly decisively.
If they're in America. If I mean, they underperformed the BRICS index by 75%. If you were invested in countries like Brazil or China, it may not look quite that way.
And the BRICS acronym actually dates from the round about that time as well, doesn't it?
From Jim O'Neill came up with the term in a matter of weeks afterwards, talking about a summit that was in the wake of 9/11 and suggesting that those countries should be at the table, not just the traditional G7.
Yes, and we have, I mean, obviously the decade has been dominated by the rise of China. I mean, that obviously has affected the whole investing pattern right across the globe.
Yes, arguably it contributed to the artificially cheap credit in the US, which had all the fateful consequences it did. And it's hard to say that much of the responsibility for the rise of China can be laid at the door of Osama bin Laden or of Al-Qaeda.
It's been a very difficult decade in which to sort of predict which way it might go for investors. There's been two wars. Calamitous monetary policy,
yes,
resulting in the financial crisis of 2008,
yes,
the housing crash,
yes,
banking collapse,
all of which in financial terms possibly dwarfs the collapse of the two towers. Yes,
yes, absolutely. And I mean, to what extent can we link one to the other?
Well, it's always tempting, particularly for those of us who are actually there on the day, for whom it was quite a scarring experience. It's always tempting to overdo or over-imply the causation that came from it. That being said, the tax cuts that the George W. Bush era tax cuts were very plainly politically linked to 9/11. There was a belief that we were going to have a savage second dip to a recession, and that those tax cuts, which arguably we've since discovered we couldn't afford, were necessary to deal with that. To the extent that deficits are a problem, plainly the fact that we've had two wars was extremely important to the US moving into deficit, and certainly reasonable to say that those wouldn't have happened in the way that they did and when they did without 9/11. And then finally, monetary policy is very important. There's an argument that similarly to the Y2K bug at the beginning of 2000, there was a sense that this was going to have a very big and immediate effect. You had an immediate response in terms of lowering rates. Rates were still as high as about 3.5%, I think it was, on the day the planes hit, and they went down as low as 1%. Plainly, in retrospect, that was a fateful error, and the events of 9/11 contributed to it.
Yes, and I guess the ultimate question for investors is to what extent the decade has been priced into to where the markets are now, and to what extent, can we sort of look at where the markets are now and say, well, this may very well be a floor, and that the next decade starts here, whether it's
that would be nice if we could say that we had a floor. I mean, the S&P bottomed at 666, a nice memorable number back in March of 09. The dollar is down on a trade-weighted basis by a nice round third since then. It's still questionable to me whether ultimately by far the more important factor than 9/11 was the huge bubble that had burst the year before, and what now looks like a mistaken response to it. I'm not sure that there is an end to that, but certainly there is there continues to be an elevated sense of risk and volatility in markets, which probably is because we knew that 9/11 happened.
Okay, well, here's hoping that the next decade does not contain so many mistakes.